From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 26, 2018. Today we're taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. We're starting here on the daily time frame. A couple of trends to consider here. Really, I just want to look at the shorter or midterm trends that we're seeing here on the daily time frame, so I'm going to zoom it in a little bit. And as you see, the black trend line was a rising trend for several days. A couple of weeks was pushing higher. Past week and a half or so, we've seen a fall along the blue trend line, where the US yen has been pulling back down again. So some interesting things about that. Take Fibonacci from the low to the highest high of the black trend, low to high of the rising trend. 382 Fibonacci retracement level lives at 109.83. That's just inside the blue shaded area above the current market price. Blue shaded area now acting as resistance underneath the 382. Interesting enough as well with that same fib. Let me put an arrow here at the blue zone. Let's make it able to see it here. It's tough to see it that small. So there's your arrow there. So there's your 382 fib of the black trend at the blue shaded area. What's interesting is that 618 sits down here at the yellow shaded area. 109.17 is where the 0.618 Fibonacci retracement level lives. So underneath the blue zone, we're under the 382. We're underneath resistance. We're targeting back down to the yellow zone if the market continues to go down. Now the risk in this situation, of course, is that it doesn't do that, breaks back above the blue zone, the 382, and starts moving back higher again. Obviously, today's current price underneath 109.70, 109.90, the blue shaded area as we view it here on the daily time frame. Zoom in one more time. You can see that easy right here. Last time we were above the blue zone, got underneath it, it went all the way to the yellow zone. So that's our expectation. I'm looking right in this area, right here where this green circle is, where it got underneath the blue zone, went to the yellow zone. That's why our expectation is that's what will happen now. You can even see it right back here. When it broke the blue zone, it went to the yellow zone. So both of the green circles giving us our clue here that as long as it's under the blue zone, we look for it to go to the yellow zone. Is that a guarantee? No. I don't control the market, neither do you. But that's what our expectation is based on historical price action. Looking for lower risk and higher reward. What's the risk again? The risk is it breaks back above the blue zone. So we want it to stay under the blue zone. We want it to target back down to the yellow zone or lower. As long as it's under the blue zone. Also, I don't believe this is a quality opportunity to buy it. You don't want to buy under resistance, 109.70.90. So the only real reason to buy the US yen or go long would be that it gets back above 109.90 and above the blue shaded area. So we're not buying it. We're looking for an opportunity to go short underneath the blue shaded area. Now, if you were in yesterday's live trade room, you'll note that we did have a pending order entered in the live trade room yesterday at 109.70. As the market began to fall yesterday, prior to closing out my trading, I went ahead and removed that pending order. Didn't let it sit overnight, but I've put the same order back on today. Taking it down towards the 4-hour time frame. Yesterday we were sitting here with this blue candle, the red candle getting up towards 109.70. Again, I did not leave that pending order there, and it started going down, so I was kind of happy to remove it prior to closing out my trading for the day yesterday. But now back into it. 109.70 is my pending sell order. Now looking for another, just a touch of that blue zone. The risk again is that it goes up. Stop loss would be above yesterday's high here. Now, if you're in it from that entry yesterday, if you stayed with that pending order from yesterday's trade room, then of course you should be protecting profit. You probably already have seen a decent amount of profit, 30 pips or so, 30, 35 pips, depending on where you had your stop loss on that spike higher. So for the day today, it's not too hard to see. We're finding resistance at the blue zone. The only reason I would trade this right now, as long as it's underneath there, is a short. I don't think going long right now makes a whole lot of sense. We do have some consumer news coming out for the U.S. at 10 a.m. Eastern U.S. time. May change some of this a little bit. We'll see how that plays out, but at least for the time being, I don't think it makes sense to go long. It makes more sense to go short for the U.S. yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.